Good morning, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:44 a.m. on a beautiful New York morning, June 26th, 2017. This is going to be a very short, to the point, very technical and tactical update on the upcoming week. This particular week is a very critical week for the market. It's the end of the second quarter. It means a lot, as I've been stating for a while now. And I've explained to my members over and over again over the years, the end of a pivotal second quarter for the multi-trillion-dollar money management business, specifically the mutual fund business, is a very, very important and vital time for the people who run or manage money. Money management is the hidden force that drives the markets. It carries a lot of different motives aside from fundamentals, technicals, and such. And the bottom line is that for this coming week, June 30th, is the end of the second quarter for 2017. And that simply means that there's going to be a heck of a lot of window dressing and portfolio markups. And window dressing is very simple. You add some of the best performing stocks to your underlying portfolio, and I'm talking about fund managers who do that consistently, so that it looks like you own those stocks from all the way lower. Because no one really knows when you get those second quarter reports in your mailboxes, mom and pop gets them, when they bought Amazon, when they bought Tesla, when they bought the Netflixes or the Regenerons or the Biogens of the world, as long as it shows that it's one of their holdings. It seems kind of tricky, but hey, that's life. So window dressing has a very powerful tailwind, and that should drive the markets to test what you're seeing behind you, a complex triple bottom, complex inverse head and shoulder, to test and possibly go slightly higher than the 2452 level on the E-minis, which translates to about 2456 or 2457 on the S&P 500. So you're looking at roughly about 20 more points from here on the Dow Jones Industrial Average. That translates into roughly, 20 more points from here on the S&P 500. That translates into roughly 120 or so Dow points. And you probably will see that as we get towards the latter part of the week. Now, keep in mind, in window dressing, a lot of stocks that haven't performed in this haven't performed let's put it this way, haven't delivered the returns, and the stocks which are not the Amazons of the world are going to be dropped from that portfolio. So you're going to see a lot of rejiggering and portfolio rebalancing that also happens along the way. The Russell 2000 has been a very powerful force. I have shown the charts on that. I suggest that you guys take a look at it. I will not have time to show that today on this particular broadcast, but the Russell 2000 is on the cusp of a powerful breakout, and my charts have clearly shown that. I suggest you review them carefully. That is probably going to be one of the stronger trades for the next coming weeks. Swing trades for the next coming weeks. So this is your S&P 5, this is your E-minis, the futures, and this is where we are. This chart was drawn a while ago, and you can clearly see here that this breakout level, which had a sudden, powerful breakout on the 19th of June, right after the market opened, and culminated in a new all-time high up here on the indices. Gave that back, tested a very powerful range support here at 2427 that I've been putting down through and through. And again, for a lot of new members who are listening to this, you have to focus on my tactical charts. You don't need to overanalyze them. I put the numbers down. I show the lines. You just have to write them down to see what these levels are. Because the market is doing nothing but trading between a very tight level, and of course on the futures market has broken up a little bit here, and the futures are up roughly about 6 plus points, and you can see here that this is the range. There you go. That's the range. Now this chart I find to be very compelling because it's showing you multiple heads down here. There are many ways you can dissect the structure. This pattern came to me as I was looking at it over the last after the market closed on Friday, and I put it through in a way that everyone can understand. Here you have a range. Here's your multiple bottoms, big ones, and that's your head. Here's your left shoulder. That's why I called it a complex inverse head and shoulder, because here's the head. Here are your multiple left shoulders, 1, 2, 3, 4. Here you have 1, 2, 3, 4, almost 5. And this is where we are right now. There will be strong resistance at this point. You can see that. Okay? That's why there's a red arrow here. But that resistance most probably will be taken out, not in a straight line, in my opinion, like it did here, but most probably will come down here, test the upper edge of this range breakout. That's roughly around 24.38, 24.39, and then try to bounce from here. It's quite simple. Here's your downtrend line. If we break here, then we're going to come down to the bottom end of the range, 24.27. If something pretty dramatic like a mini black swan event happens, in other words, an unquantifiable news event, political, domestic political, or macro global, whatever the case may be, then if we break this range, guess where we're coming? Back to this very strong support at around 24.20 on the S&P 500 and around 24.17 on the ES or E-minis, the futures market. We break that, quite simple. We're going to fill this fill this again, lower level and retest. This is approximately this is actually not 24.16. That's incorrect. It's actually around 2400. Okay, it's around 2400. So we're going to test that 2400 level, which is roughly around 2405 or so on the SPX. And that goes all the way back to the end of May. So all these scenarios are possible. On the bullish scenario, this is what works. Goes, we're up here right now. This pattern replication most probably will be what happens here. This is all pattern symmetry. Human behavior is manifested in the form of technical charts. That's why technicals can be read to determine or predicate what might happen. Now, why is this so important that I'm showing this on a Monday morning? It's important because whatever trades you're doing on the upfront, as I've said over and over again, is going to basically be tossed around, and your profits might disappear in seconds if you do not know and track what is happening on the background, and that is the futures market. Okay, that is the futures market, and secondarily the S&P 500. Of course, I'm not, we're not talking about Russell 2000 here. The Russell 2000 chart looks quite different, and I posted that on my Twitter feed. I suggest highly, for your own good, for your own P&L enhancement, that you go ahead and review that. So that's it. It's really quite simple. You got a very powerful double bottom, which is a dragon bullish, right? Complex. That means there are multiple ups and downs. Complex. That's why I put a macro cup and handle. That's a cup, right? There was a mini handle here. All this has been shown on my previous video cast. And then you have a W formation, a breakout, a retrace of that breakout to test the lower end of the range. That's 24.27 or so. Moving back and forth all week. This was all week too, 7 days. Roughly 5 business days, 5 business days, 7 calendar days. Same thing happened here all week, and now we're here pre-market. Minor pullback is fine. Breakdown, gotta go short. Make some decent money if we fall within this range, and if it's a fast, quick fallout, which generally what happens these days, then you are going to make a ton of money, as we normally do on the short side, tactical shorts, and you are going to get roughly from 24.41 or 20. The short point is roughly around 24. I would say around 24.37. More importantly, around 24.35. Because once we break that, it's going to come back and test the 24.27. These 10-point type of moves generate anywhere from 60 to 120% plus, if not more, on index options trades. So that's it. Study this chart very carefully. It's a complex inverse head and shoulder with a quadruple bottom. I should say quadruple, not triple. I'm going to put quadruple bottom. 1, 2, 3, 4. These charts are simplified and shown in the most visual terms for all traders, technical or non-technical, to be honest with you, to understand, so they can effectively manage their trades on the front side. Have a great day. I'll be in it. I'll be running a little bit late. I have some important conference calls I have to deal with, personal stuff. And in the meantime, have a great day. Have a great week. Stay tactical, not emotional. Your emotions have not made you any money ever. Tactical trading delivers profits, and that's all I got to say. Congratulations to all the emotional traders who have converted into tactical traders. Emotions are never going to leave you because we have a mind and a brain and feelings, but they can be minimized when it comes to the decision-making process of trading and investing. Thank you for listening. Study this chart, print it, set it up on your own screens, and enjoy the benefits of clueless ape trading. We have had a fantastic week last week, and especially Friday, not to mention the lottos, which were up anywhere from 400 to 600% intraday, and I suggest that you all participate in them as much as you can. Have a great day. See you guys soon.